Hey guys, Kevin Bob here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. Now, our guest for this week's show is founder and managing member of Wealthway Equity Group, Sam Liebman. Now, Sam has owned substantial interest in over 70 properties during the past 30 years, ranging from multifamily communities, office buildings, and shopping centers to the ground-up construction of a luxury 21-story condominium development in Manhattan. Additionally, Sam is the author of the new best-selling real estate book, Harvard Can't Teach What You Learn from the Streets, the street success guide to building wealth through multifamily real estate. So we're going to chat about that as well today. So guys, with that, it's my honor to welcome my guest for today's show, Sam Liebman. Sam, how you doing today, my friend?
Good, Kevin. Pleasure to be with you, guys.
Yeah, excited to have you here. And you are coming to us from, I think, now snowy at this point as we record this interview, snowy Long Island, right?
Roslyn, Long Island,
Yeah. You guys are getting dumped on. Maybe not no Long Island, but I know that major
yeah.
parts of the Northeast are getting just pummeled right now. Well, Sam, pleasure to have you here. Excited to chat with you about your background. Again, you've been in the space for decades and decades, and so excited to pull back the curtain a little bit and see behind the scenes. And so, with that, maybe for those folks that aren't familiar with you, that don't know your background, who you are, what it is you do, maybe take a few minutes. Fill in the blanks of that, this very brief introduction I gave you, and tell us a little bit more about yourself, and then also how you found your way into real estate.
Well, I'm just a kid from Canarsie, Brooklyn. And it used to be the Mafia minor leagues. It seemed like everyone, his father was connected. And I grew up very poor. My father was a very dysfunctional family. And you had to fend for yourself. You really did. And you learned street smarts. You learned how to get your spider sense tingling. I mean, almost every day, there was someone waiting for you after school to fight you, or you had to know how to read your way around. But I always, although my family was dysfunctional and poor, they always stressed education. And what I did was, even though I was a C student, because I was so worried about, someone would see my house or what was going on, that I couldn't wait to 3 o'clock to go out and play ball. And I continued to be a C student until I got into college, and I went to BC, Brooklyn College. And when I was a junior, I switched majors. I became an accounting major. And I had a teacher by the name of Professor Robert Miners, and he changed my academic life. I took him for 4 classes, and that's why I say I majored in minors. And he was like a stand-up comedy routine. He would come in with a sign under one arm, a briefcase on another, and put the sign on the blackboard: flunk now, avoid the rush. Anybody got a girlfriend? Raise your hand. Get rid of her. This is a hard class. You're going to study, study, study. And we all knew it was an act. But what he would do is say, okay, scholars, write this down. And accounting is a very boring subject, which is really a lot of concepts, difficult concepts. He was able to dictate notes to us, the difficult concept in English, so we understood it, with a little example. And I was noticing that subliminally, I was gaining confidence. I understood this difficult concept. And then I did another one. And it built a lot of confidence and kept me motivated, which is very important. Mm-hmm. And all of a sudden, we leave the class with 5 to 10 pages of notes, which replaced the textbook. And I started getting A's and B's, passed the CPA test the first time. And CPA test is supposed to be one of the hardest tests. But I did it because I used that model of writing it down and take a concept and try to break it down. And I feel that the school systems have failed us. These teachers that say, I don't give A's. What do you mean you don't give A's? I'm sure everybody's had a teacher like that. Well, the average grade is a 40, and they curve it up, and then they yell at the students. Well, how much did you learn if the average grade is a student? Who really failed? Yeah. So then what happened was, after school, I started working in accounting firms. And I was lucky in that I represented and learned a lot of real estate clients. Then after that, I'd say in 1982, I got another big break. A very well-known developer was looking to start his own company called Mountain Development Corp. And we started with a secretary named Sandy and myself and Bob Lee, the owner. And 3 years later, we had 22 million square feet of office space around the country. I got what I call my Harvard education. And he taught me to open my eyes. You know, when you go into a building, look around. Don't just be a piece of furniture. Look around. So I learned from him. And then I joined a college friend of mine, and we formed our own accounting firm. We started representing developers. And I think accounting is probably the best background you can get for business. Just don't let it be your profession. Difficult profession. And then I went into, I met one of my clients was the Kinsey Corp, which was a small management company that owned about 80 buildings, small buildings in Times Square, the East Village. And what I saw was that a lot of young people were moving in, even though there were drug deals across the street. The kids didn't care. They were 2 blocks away from the hot club. So we learned, we saw what the rents are, and then we formed a company. It was originally called Equity Resolutions. And at that time, in 1992, you know, the city was in the toilet. And basically, you could buy buildings for 3 times rent roll. We were buying buildings that were, the mortgage was, call it $1 million or $2 million. We were buying it for $500,000. And those buildings that we paid $500,000 are now worth between $15 and $20 million for a litany of reasons that I try to teach people how. Then I met a friend of mine, wanted me to get involved. We built a 21-story building from scratch in Manhattan. Then I formed a fund in 2008. We went to Texas, and I saw what was going on in Austin and East Dallas. We bought about 30 buildings there. And we just, you know, everybody knows we did well with that. Now, a lot of it was luck that the market went up, which we never thought it would be like this. But we did a lot of value add to the buildings. We did a lot of very smart things that increased the value of the buildings. And I've identified 4 ways to increase property value. With me, it's all about wealth, not rich, wealth. And there's a big difference between rich and wealth. Chris Rock said it best. He said, Shaq is rich. The guy who signs his check is wealthy. And I always remembered that. Now, how do you build wealth? Well, you obtain a large asset base that increases over time, right? That's how you increase wealth. So if you can, for instance, if you can acquire $10 million worth of real estate, which, believe me, sounds like a lot, but if you master the fundamentals, as you know, it's really not. $10 million, and if it just increases 3% a year, and you know that's very low. I mean, you could raise rents, you could do a lot of things to make it increase much more. That's $300,000 a year for 5 years. That's $1.5 million of equity, right? Compare that to flipping houses, which I'm not knocking. I'm just showing that when you flip houses, where is the big asset base? It doesn't exist. Mm-hmm. So I focus on multifamily houses, multifamily apartments, and we took advantage of the agency debt, which was available during 2008 to 3 years ago. So we've accumulated, we built tremendous amounts of wealth. We've helped our investors. Some of our investors became millionaires. I mean, it's been good. Now the question is, going forward, what do you do?
Well, I want to back up. Before we get ahead of ourselves here, I want to talk to you about 08, 09, when you made your venture to Dallas, and I think you said Dallas and Austin. Are those the two? Okay.
Austin, Texas.
Yep. What were the underlying fundamentals that you saw there? I mean, was that the first time that you had sought out real estate investments in Texas and Dallas and Austin? And if so, what were the underlying fundamentals that attract you there, especially during a time? And I know that those markets didn't get hit nearly as hard as some of the others, but still there was distress there. And what were the fundamentals that you were able to kind of look through the mess that was going on around the country at the time and see still opportunity?
That's a great question. somebody I was introduced to was talking to me about Austin. He was looking to pick my brain. He was looking to build a small motel. So we went out and looked at it, and I saw what was going on there. 200 people a day moving to Austin from
Mhm.
California and other places. Austin had but there's two parts of it in Austin. There's the University of Texas, which is known as the West Campus area. Then a mile and a half, there's downtown Austin, which is, the business center and restaurants and etc. And Austin had a master plan in West Campus, and it was called UNO, University Neighborhood Overlay. And they basically rezoned the whole area. They became very, very real estate friendly, which is something you don't have in New York. They were inviting people to invest in Austin, and they upzoned on this overlay where you can build up to 21 stories. Now, so we bought uh, a parcel that was owned in a family for like ever, which was hard. And then we bought 4 or 5 other parcels, and we put them together, and we built what's known now as 19 Rio, or Point on Rio, which is one of the most successful student housing complexes in Austin.
Mhm.
So what did I see? I saw parks being built, new schools. At
Mhm.
that time, I stayed away from Florida because Florida to me was money, water, build, very low barriers to entry. Whereas in Texas, there were high barriers to entry, especially in Austin. There wasn't that much land that you could keep building. Now, University of Texas wasn't expanding, but their law school was. They opened up another type school, science school. It was young, vibrant, entrepreneurial. I saw what was going on there. You didn't have to be a genius to see where the traffic was going. Then in East Dallas, the same thing. There was a company called Power Properties that went into the area that, they were the leaders, and they started gut renovating these C buildings into B buildings. So we were able to buy, I'll tell you a story. We bought an 18 building portfolio, 18 communities for $12 million
Oh my
in
God.
2010, that 5 years prior was worth was sold for $56 million, then went into foreclosure. So for 12 million, we bought these 500 units. I don't want to tell you what they're worth now. And we renovated, we upgraded, etc. And East Dallas is one of the hottest areas in the country right now.
Yeah.
So what I saw really was the political environment that was business friendly. In New York, you have the opposite. New York City has an invisible sign. 1% is real estate community, get out. We don't want you. Texas and even Florida now has an invisible sign. Welcome. All 1% is welcome, welcome all real estate people, and you don't have to pay taxes. And that's why you see everyone moving now to Texas, Florida. A lot had to do with the virus also.
Mhm.
Now, you talk about last year, yes, the restaurants and the retail and commercial got destroyed, but residential, rents, people weren't paying rent. You couldn't evict them. There was a moratorium.
Mhm.
So last year we lost a lot of money, but the value of the buildings went up, which, as you know, I mean, lost money, value of the buildings go up. A lot of it, the financing, you can get 2.5%
Yeah.
now, fixed for 10 years, interest only. We talked before the show, what it does
Mhm.
to your cash flow. So when you want to improve cash flow, take a look at the available financing out there that you can take advantage of that I don't think is going to last forever.
I agree with you. I mean, I think that we're going to look back in years to come, and I think the value of any asset's going to be the underlying debt. If you place long term underlying low interest rate debt on that property, that's going to be the value proposition in that prospective deal. Because I
Right.
mean, rates are inevitably going to go up, right? They're already starting to creep up. They have to go up. They can't go back down. I shouldn't say they can't, because so many strange things have happened over the past 5 to 10 years. But we'll leave that for another show. I want to hit one more thing on the acquisitions you made in Texas, because as we know, history has a habit of repeating itself. Maybe not in the exact same way that it had prior, but you had mentioned that those 18 communities you purchased for 12 million. They had sold for roughly 57 million. I think you said 6 or 7 years prior. What was it? What mistakes did that last owner make that ultimately led him into a distressful state that led to foreclosure?
Well, it was, there was when the dot-com bubble exploded.
Okay.
And, he, at that time, they renovated the property too. They spent a lot of money renovating it. And because of that, they had a lot of debt on there and they couldn't pay the mortgage. So it was actually foreclosed by Goldman Sachs. We got it from the Whitehall Group, from them. And but an interesting thing is, you want to hear an interesting story about that?
I'd love to.
Okay, so I'll never do this again. But what you had to do is you had to put in a bid, which is what everybody does. It makes it an auction. I'm used to sitting down with the owner and talking. I can meet him. I could use my charming personality on him and try to negotiate. And, I'm a CPA also, so a lot of times I could structure something if he has a tax problem. Gives me that opportunity. When you go through a broker, you just don't know if he's hoarding things, if he has the exclusive and my offer came into a co-broker that he has to split the commission with. You don't know what goes on behind in the back room. So they were calling us, and I didn't think we'd get it, but we put in the price, and well, you made it to the next round. Okay, great. Then we made it to the next round, and then the next round, and then finally there was a final decision to be made on a Friday, and they were going to call me at Friday at 5:00. Friday at 5:00, and they wanted to know my plans for the property. I get the call. There's like 4 people on a conference call. So, Mr. Liebman, what are your plans for the property? I said, well, we're going to keep everybody there. We're going to keep the property, renovate it, and just keep it long term, and make sure that we're part of the community, and continue with it, and raise rents by putting in new floors, new appliances, putting in maybe a pool. That's what we're really planning on doing. I told the truth. Well, the other company, which is a very big company, told them that we're going to get it rezoned and build, try to build 5-story. Well, the community didn't want that. There was give it a Liebman. So we beat out a very, very big company because I told the truth and said, I'm not looking to disrupt your community, because they knew they would get so much of a backlash from the other people that didn't want it. So that was sort of a little bit lucky, that way.
So what are you doing today? We had discussed before we started the show here, obviously there was a lot of buying opportunities back in 9, 10, 11, 12. Gosh, I mean, you'll make that argument 13, 14, 15, 16 now looking back, right, in hindsight. And so today is a very different landscape. It's very much a seller's market. It's you've got to turn thousands of stones to find one that even has a remote sense of opportunity to it. And so, what are you guys do? What's you and your group? I mean, what have you bought? Have you bought anything over the last couple of years? Are you just kind of sitting and waiting on the sidelines for some type of correction to occur?
We're sitting on the sidelines right now.
Okay.
As you know, I just wrote a book. I'm trying to do an online academy called Street Success Real Estate Academy to teach the fundamentals. I'm 66 years old. My son, Michael, is in the business with me. And, that my passion is now teaching and helping others. It really is to help them learn the right way. But that doesn't mean if a deal doesn't come across, my adrenaline starts going.
Sure.
I'm waiting for what I believe in the office sector and the retail sector, Armageddon.
Let's talk about that.
Yeah.
Please elaborate.
Well, let's talk about office. You don't have to live in the city to do business with the city. And I don't think that's going to change. I don't think that office occupancy will ever go up over 65%. That's my opinion. Now, right now in New York, in Manhattan, the occupancy rate is less than 30%. The leases, they might be leased 80, 85%. But it was overbuilt. Office was overbuilt before the pandemic in Manhattan. And look what's happening. Let's look at something very interesting. Let's say you're a law firm and you have 30,000 square feet in this big building, and there's 9 stores on the bottom. You call up, your lease is up, you have to exercise your option. You call up the owner, so we got to talk. I don't need 30,000 square feet. I only need 15,000 square feet. Okay. Well, the owner, and I don't want to pay $100 a foot. I want to pay $65 a foot because across the street, I can get better space for $65 a foot. But look at the ramifications of this. The owner has to now reconstruct and renovate the guy for the existing tenant, because maybe the bathroom is on the wrong side. He's going to want tenant improvements, free rent, right? Okay, and he keeps a $15,000 tenant because right now, empty units don't make you money. Now he has to retrofit the other part of the 15,000 square feet. He has to spend money renovating that. It could take him 4 to 6 months to get a new tenant. He's going to have to give the new tenant TI, right? Free rent. Now that's one tenant in a building, okay? And if I'm right, look at, and the biggest thing is that $100 that went down to $65 a foot. When you multiply that out, look what it does to your valuation. Your NOI, you put a cap rate on it. Your valuation went into the toilet so much that it's probably the building's worth less than the principal amount of the mortgage. There's also deferrals that were given because of COVID that weren't gifts. They're still owed. There's also massive amounts of rent that the landlord, never received, that he's trying to get, that he probably won't receive. So when you look at this, and that's one office building. Well, these guys own a lot of office buildings. I mean, I see Armageddon. I don't see any way out of this. If you take 65% of a building that's occupied over time as these leases turn over, the landlord's got to spend so much capital, especially financing the tenants, to get a reduction in his valuation. I mean, I'd love to have someone show me I'm wrong on that one. And then the 9 retail tenants at the bottom, landlord, we got to talk. There's nobody here in the building to go to our stores. We don't want to pay $200 a month. We only want to pay $100. And this is what I see going on in our shopping centers. And I have a medical building in Manhattan. And these are doctors. They didn't pay rent. They had brokers. We represent so-and-so, and we want to renegotiate our lease, and we don't want to pay $80 a foot. We only want to pay $60 a foot. And you're going to pay our broker's fee. And this is what has been going on during the pandemic. And, it's kind of scary. And now you have a progressive movement all over the place that wants you to universal rent control, right? So I'm worried about that because all around the country, in I think Minneapolis, Minnesota, they just passed universal rent control. So they're all yelling, we need more affordable housing. Okay, here's your incentive. Go sign a $40 million construction loan personally. Your insurance and operating expenses are going up tremendously. We all need money, so your taxes are going to go up, and we're going to cap you on how much you can charge. Yeah, sure.
It
okay?
just doesn't work.
I mean, these policies just don't work, but that's what we're faced, and that's what's growing. So that's what I'm worried. I want to buy somebody else's mistakes, and we can raise as much money as we need, thank God. And I have investors for the last 30 years. When I return money to them, they yell at me.
I know. Yeah,
okay, you know the feeling.
It's a good problem to have.
That's my little speech. So I do think.
That's.
Yeah.
But I want to. I think that's great, and I don't disagree at all. Office again. It's just that time's going to come. It's going to be prolonged as these leases are still in place, and it will be a maybe not a slow death. I mean, but it won't be overnight, right? It's just going to be a whatever. Death by many stones, I guess you could say. So what is the opportunity there? What do you do? What's the readaptive use? I know we had talked to you about the couple towers in Dallas. I just saw some news on this morning, 2 office towers that are being converted into high-end luxury apartments. Is that the opportunity, or do you see something else?
Okay. One of the things we didn't talk about is when you have 65% of the building leased and occupied, how are you going to get financing? Mortgage. That's another thing that's going to add to it. Mm-hmm. So I think you're going to be able to pick up these retail and office buildings at bargain basement prices soon. I think banks are going to be inundated. Now, when I bought all these properties in the 90s, there were a tremendous amount of properties, but no money. Now there's going to be a tremendous amount of property, but there is a lot of what we call dry powder. $300 billion on the sidelines waiting to drop in. So that's a factor that has to be considered that didn't exist in the last recession. What I think is, I think you have to know enough to look for opportunities overlooked by others. What do I mean by that? Let's say you have these big box stores. They're 100,000 square feet, and the city is getting, I don't know, $200,000 a year in real estate taxes. Now they went dark; they're out. So you have a 100,000 square foot eyesore that, remember people used to say, I want to build, but NIMBY, not in my backyard. Well, these big box stores are not located in anyone's backyard. Why not rezone those, the towns, the districts, rezone them to 3 or 4 story affordable housing? Now, the owner can make some money. And the other thing can happen is you're increasing that tax base so that the city doesn't look at an eyesore. You're creating affordable housing, and the city will get much more in real estate taxes. You don't even have to give tax abatement. Keep your tax abatement. Just let me build 3 stories or 4 stories. I don't understand why they don't do that. So the opportunity is going to be to buy these vacant shopping centers and try to get them rezoned in certain areas where people, either it exists, sometimes the zoning already exists, but I think there'd be less objections to the areas where these big box stores, and you don't have to worry about parking or traffic studies, because their parking lot is incredible.
Right.
Some of these are on tremendous. So that's what I see as a great opportunity that I'm going to look for, and also to convert it to industrial. But Amazon can't buy everything, right? Office buildings. When we built the 21-story building, I learned about office buildings. Also, when you convert an office building to residential, you have to do something that's called cut the building. You lose rentable square feet when you do that. So you have to consider that also.
Yeah, elaborate there. I'm not sure I've ever heard that
Well,
terminology
you have a
before.
200,000 square office building, right?
Mm-hmm.
But if you want to lay out apartments and you want to do things according to the needs of residential rather than commercial, there's different laws. There's different setbacks. There's different other things.
Yeah,
You normally have to cut the building, and you have to you do lose a little bit of or a lot of rentable square foot sometimes. Depends on where it is also. So the opportunities to me are going to be looking for those opportunities that are overlooked by others, but also for the Armageddon that I think is going to happen. So if a retail tenant is now you buy it for half of what it was, or even 60% of the mortgage. And if the retail tenants are now paying $40 a foot instead of $60 a foot, maybe they can make it at $40 a foot. So maybe your investment is sound then. So those are little tricks. I'll tell you another thing. New construction, you don't make as much money as you think in new construction. I made more with renovating than I did with the 21-story building with the $100 million sellout. That's another fact, because right now, construction costs have doubled.
Yeah.
You can't even get people to work. You can't get contractors. I'm having problems. We have about 2,000 units now. I have problems filling work orders. Nobody wants to work. That's because of people getting sick, but also they're giving free money away through unemployment and other programs. Why work?
Yeah, it's interesting. I read a recent report on retail, kind of the challenges associated with retail, and they were interviewing a gentleman, and I can't remember where it was. He was either in Florida or Texas, but he had a significant sized portfolio that he recently that he sold out of either this year or at the end of last year, and basically what he had stated was, through his lens, the biggest challenges facing retail isn't necessarily e-commerce at this present time. It's labor shortage. Labor shortage is, it's, I mean, when do we fix this problem? How does this problem get resolved? Because it is significant, and it's only getting worse here over the coming weeks and months. And does it revert at some point in time? But in any event, that was kind of his thing. That was the only time I've ever heard that perspective. I mean, everyone knows that there's major challenges with getting staffing and what have you, but he felt that that is probably one of the bigger risks if that doesn't get resolved sooner rather than later in the retail space. What are your thoughts on that?
I think that's something I think if the pandemic is stabilized, which I think it will be, I pray it is, I think will also stabilize. I mean, the minimum wage of $15 an hour, people can't live on that. And that's for another discussion about the redistribution of wealth. These progressive policies, I agree with a lot of them fundamentally. I just don't agree with how they're going to administrate them. I just don't think they're going to work. A wealth tax won't work. How do you put a wealth tax on real estate? You're worth $50 million and they want a 1% wealth tax. So it's what, $500,000 a year? Am I right?
Yeah.
Well, you don't have the cash, right? It's in bricks. How are you going to pay a wealth tax? So it really, they do these things. They don't make sense. I want more residential housing. I want more this, more that. But we're going to cap what you're going to make. Well, that's really going to inspire people to build more rental housing. There is a shortage of rental housing right now. And also a lot of younger people don't want to own.
Mm-hmm.
Everything is portable now. There's a change in culture in restaurants and how young people order. It's just, everything. There's just so many changes. When people ask me, what do you think is going to happen? I use the old Bob Dylan line. The answer, my friend, is blowing in the wind. Like, I can tell you with these variables, if this happens, this will happen. If it blows this way, I can tell you what's going to happen if interest rates go up, if this goes up. I just can't tell you which way the wind's going to blow.
Yeah, right.
And think of how many variables there are. Do foreigners get control of the virus so they can come in here? There's just so many variables. What I do see is temporary. I do think that, once it's stabilized soon, everyone's going to get a couple shots a year and it's going to be like the flu. That's my personal opinion.
Yeah, I agree.
So people will still have virusitis, germophobics and everything, so they'll be afraid. But why go back to work? In fact, I think that it's going to become an amenity if you could stay home.
Yeah, I agree with that. I mean, I think a lot of folks have now they've had to readapt their lifestyle. The ones that were in an office now that are working from home, they've had to, with their kid, if they have kids that are in school, or they've formed a habit, like they are in a very new routine of now working out of their home, not having to do that commute. They haven't filled up their gas every week for the last 2 years, right, in their vehicle, and it's really hard to break that mold because inevitably you survey 100 workers that used to go to the office, more than likely I'd say probably 80% of them would choose to work from home, given that option, right? So
there's the great boxer Marvin Hagler had a great line. He said, it's becoming harder and harder to get up at 4 a.m, get out of silk pajamas and run.
Well, yeah, God, man, you had mentioned that you used to travel from your home in Long Island to the city 2 hours. I mean,
yeah, each way.
That gives me anxiety even thinking about that.
Go on a dirty train. Yeah.
On a dirty train at that. On a dirty train.
Another problem in Manhattan is the crime. It's off the charts. It's not safe. How do you start building or getting people to be residents if the crime is off the charts?
Yeah.
They're passing things now where they don't even, the new DA of New York City, he's not arresting anyone. Yeah. I mean, this is just, to me, crazy. I understand you need reform and Black people are being racial probe. Yes, I understand all of that. And I think anybody with a brain would agree with that. But how do you defund a police and not have any protection? And that's what they're doing.
Yeah.
And that's why people are leaving in droves. Okay, look why Florida. Look at how many people are moving to Florida. We used to call Florida the land of no appreciation. right? Look what's happening now. You can't in Miami and Fort Lauderdale and Boca. The prices have doubled.
Yeah.
In the Hamptons in Long Island, the prices have doubled of homes. Why? Because people don't have to live in Manhattan to do
Yep.
business in Manhattan.
Yep. Now I'm gonna switch gears real quick before we wrap things up, if we could here. And you've been involved in a lot of different transactions over the years, and not one transaction ever goes as planned, right? It takes longer to close than anticipated. There's more hoops that you have to jump through. The financing you originally set forth in your pro forma just doesn't pan out exactly as you had planned. What have you? A million different challenges. But I want you to think of the one deal that kept you up more nights, sleepless nights than any other deal, the one that gave you more gray hairs than any other deal. And there's probably multiple, but like the one that really sticks in your mind as the most challenging deal. Speak to me about what the challenges were, how you overcame them, and ultimately, going back for round number two, what would you have done differently?
Well, the worst deal we've ever had, only had, thank God, one that was really bad. We built a student housing project, brand new, in Texas, and my joint venture partner, who's a developer partner, we had done another with him, very successful, and we were going along, and we raised all the equity, and we were supervising certain things. He was handling all the construction, and right when it was time to lease, it wasn't. We were behind. He was behind. Well, he committed suicide and left us with
Wow.
a mess. And I put in $2 million of my own money to try to save the deal, and we couldn't do it. He went so far over budget, sort of lied to us, didn't tell us, and everybody lost their money. So
Wow.
that was the worst deal we've ever had. I can tell you right now, not a worse deal, but another one where I lost some sleep over. We refinanced a mortgage, and we got a mortgage. It was for a residential and slash commercial building in Texas. And the bank that we got it for, after we signed the commitment, started changing the deal. And we never saw anything like this. They were asking for things. For my partner, they found something on his credit from 36 years ago. Now, we had a tenant that had to exercise their option, and we were waiting, till we got the refinance to do this, because we had to offer them TI, and we didn't want to lose the tenant. Well, this bank kept delaying. They were asking, I was expecting, I was going to go get a DNA sample because I thought that was next. And we closed December 30th of this year. Well, last year.
Mm-hmm.
Started in July.
Wow.
And the bank just kept trying to, after the commitment, they kept changing the deal. Now, they gave us the best rate, but I will never deal with that bank again. I'm not going to say who it is. My
Okay.
broker, who's a big guy in a big company, said I will never deal. He's never seen anything like that before. When you have a commitment and then they change it.
Yeah.
So
Yeah.
that kept me up. But that one, I admit, kept me up. But
Yeah.
except for that, I get a good night's sleep.
It's all part of the game, right?
Well, you know what? I can deal with problems, and God forbid, there's a fire, there's a this, there's a that. But this kind of stuff bothers me. It irks me when a bank, professional organization, changes the terms of the deals after they agree to it.
Yeah, and I feel like somewhere along the line within that bank, it's incompetencies that probably make up that problem.
You're
Unfortunately.
100% right. It was the
Yeah.
credit manager not talking to the person and whatever. But
Mm-hmm.
and I had already given them. I had already rate locked. So I had a rate lock in there. And if I said I'm walking away, I'd lose my rate lock and then third party
Yeah.
deposits. So, they had you and you were at the mercy of them. And I didn't like
Yeah.
that. But we got it done. It's a good loan, but never again.
Yeah.
So that was the one that kept me up.
So talk to me about this book. You kind of hit on it a little bit in the beginning,
Yeah.
but talk to me about the book.
Okay.
What folks can learn by
So
reading it, and ultimately, why you wrote it.
Okay, so I wrote a book called Harvard Can't Teach What You Learn from the Streets. And it's basically things that I learned, combined street smarts with a traditional education and all my experience. And it's basically, my promise in this book is not that you're going to get rich after you're done reading it. My promise is that after reading this book, your knowledge of real estate will increase substantially. I wrote it almost, and it's funny, I use real life stories that are like some of the stories I've told here, but better ones, of experiences. And just like the teacher I had, Professor Miners, I explained difficult concepts in easy to understand language.
Mm-hmm.
Book was just released on this past Tuesday, the 11th, and it didn't become a bestseller yet, but it reached the #1 new releases on Amazon, which was very nice. And I'm starting to get a lot of really, it's funny. I've been telling the same stories for 30 years, and nobody really listened or paid attention. Now, you publish, they're all, hey, tell me that story about this.
Yeah.
There's one
great.
story in there that everybody likes. It's how I talk about shyness can cost you money. So I talked about how I once was about to close on the contract for a building in the city, and I took one last walk around, and I spoke to a drunk, the town drunk who reeked from urine. And by listening to that, I got a $200,000 reduction in price. And it's a true story. So I try to teach people the fundamentals. I indoctrinate you with the importance of increasing property value
Mm-hmm.
and how that differs and how to build wealth, lasting wealth, the right way. And that's to master the fundamentals. It's like a tennis teacher. If you have a forehand and you don't get that forehand right, you'll succeed in tournaments until you get to a point where that floor is going to come out. I want to give you the fundamentals with no flaws. Master the fundamentals and then build after that. We have a website, samliebman.com, where I have a lot of articles, a lot of information I think people will really take advantage of. And my mission here is to teach. I'm not looking to rip people off, take their money. I'm looking to teach people. And that's what sort of makes me a little different than a lot of other sites that I see where they just want you to either invest in their buildings,
Mm-hmm.
or I see a 22-year-old kid that's telling me, the way I see the market, okay, you got to have experience. You got to look at who is teaching you. What are their credentials? I believe I have the credentials and I also have the passion to teach. And that's why I love what I'm doing. It's a creative endeavor for me.
Yeah. No, I love it. I mean, you've been there, you've done that, and now you're giving back. I mean, after years and years of experience. So I love every bit of it. So it's samliebman.com. That's the best place to
Yeah,
find
I
out
think
more
people
about
like
you
it.
and what you got going
Oh,
on.
yeah, yeah.
And then Amazon for the book, correct?
Yep. Well,
Okay.
Amazon, it's also in Barnes and Noble. It's in all the bookstores. But if they go on samliebman.com, it says order, and you could order whatever you want. And if you write a review, I'll be greatly, I appreciate it.
Speaking to the bookstores,
Yeah.
when's Barnes and Nobles? How's that place still around? Come on.
Well, they're online.
No,
It's funny.
I'm talking the physical locations.
Yeah, you're right. My
Yeah.
publisher promised me 50 airports, Barnes and Noble, all the stores, and I'm in all the stores. 80% of books are now bought on Amazon.
I'm sure. I'm sure. Yeah, I would have actually guessed it's probably more than that, but I drive by one where I live quite often, and it's massive, and I wonder how that place still
Well, you
is
remember Blockbuster?
living and kicking. Yep.
Same thing.
Yep. Just a matter of time. Well, Sam, it's been an absolute pleasure having you here today.
Pleasure
Appreciate
with
you coming
you.
on the show. And guys, we'll make sure we'll put all those links and everything in the show notes. And so that's all we have, my friend. I'm wishing you all the best. And I'm going to be watching you so that when you're ready to get off the sidelines, I'm going to pay attention to what you got going on.
Thank you so much. I greatly appreciate it. It was great talking to you.
Alrighty, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care now.